Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Let me make sure I've got everybody here. After we did that, after we did the time change, I just want to make sure that everybody's listening in. Okay. And I think Greg is going to join us here today as well. So, so I don't keep you guys forever. I'm going to actually, I'm going to get started with the bias chart analysis. So let's talk about where we're at here with the euro, because I just joined Nitish and actually shorted a little euro dollar here. The risk, and this is one of the things that Dale said, and I have to agree with him here, is that we did make a higher low. So we can actually break higher here, but let's talk about where I think we could go. So first of all, let's do this. I'm gonna actually just take. Okay, this is a 4 hour. This is a 1 hour chart. Actually, I should go to the 4 hour just to make it a little easier here. Take the top here. Draw those trend lines out. So there is a risk now we can break out towards 118, right? So this is, I think, possible. Just keep that in mind if you're out there, selling some euros, because I did, ahead of the open. I mean, we're going to be opening here in about 10 minutes. So if we break 117.60, we can make it to 118 and still stay bearish. Okay. Now, obviously, support is going to be, as you guys know, 116.93, or I guess we can write 117 now, because this is the long-term 38% retracement, right? Okay. That's this level right here. You guys should know that. Oh, there we go. All right. It's the, post-COVID lows, COVID lockdown lows to the highs. Okay, here's the cable. So the cable, and by the way, the dollar is just a little weaker this morning. And the Aussie dollar is kind of false breaking. Things are happening like that. But look at the sterling. So this is a chart that I think is going to be kind of important here. If we make that symmetrical, that means resistance is actually a little higher than that. Resistance is right here, 138.25, 137.50. Actually, I'm going to write down, 137.40, 138.25, and it's range bound. So again, I think we might be developing a bit of a triangle here, something to pay attention to. Okay. All right. Aussie. Bounce. We're right at, here's the thing. I'm a little worried about the Aussie. Now, I obviously want to see how the market's open here. Stocks are strong once again. It's just, it's the same old, North America comes in, everybody buys the stock market, stocks go up, Aussie bounces. Did we create a false breakdown here? Possibly. But just remember, we are still in a head and shoulder pattern. And what Greg has said is I 100% agree. And this is you guys know, this is what I've been planning with the Aussie, and I'm hoping that he is right. The bear flag plays out, head and shoulder tries to play out. We get down towards the 618 near the 73, 74 cent level, and then it just, then we get long down here, and then we see a big move higher, right? That's what I'm hoping happens. But we'll see. Okay, we'll see. We've got a lot of work to do here. So as far as the Aussie goes, we could see some resistance, maybe. there. I'll write down 76.15. Now let's not ignore the fact that we are making lower lows. False breakdown or no false breakdown, right? We are making lower lows. So 75.30 is support. And we have to designate that bearish. Same with the Kiwi, but the Kiwi held support. Here's the difference, right? Held support. Now, Kiwi, very similar type of price action here. We might move up to 70.20. Support is at 69.40. 69.40. 70.20. All right. Dollar CAD. So the dollar Canadian, I mean, we got to watch crude. Crude's kind of all over the map. It was just trading above 60.50, and you know, it's there's an OPEC meeting. There's headlines flying around today. I still think crude's going lower, but that doesn't mean that it can't go higher above $61 today. So that could keep the dollar Canadian range bound. This end of quarter, this was the place to be long, and I did buy some yesterday, and I spun out of it quickly. I was an add-on, but I think that was the place to be long dollar CAD. I know we wrote down support yesterday at, I think, 125.50. We dipped as low as 38. I think this is going to be support again. So 125.50. And then obviously 126.40. And that's key. I'm going to keep us in bullish while we're above here, but I do think that we can dip today. I still think that we can do this. I think, but it depends on what stocks do here at the open. Swissy, what a rejection of the 618. Big 618. Big 618. That is from this post-COVID high to low 618. That comes in at 94.70. That has proved today to be critical. I mean, look, if you really want to be short dollars, short the dollar Swiss here. Just put your stops above, like 94.80 or something. If you really, really want to be short dollars. If you're like, hey, Blake, I think yields are going down and stocks are going to do whatever they're going to do, but yields are going down. I want to play the short side of the dollar. Play it right there. That's the one. I think that's the one to do it. And because you can manage the risk, it's pretty easy to manage the risk from here. And I'm not here to tell you what to think and what's, I still think yields are going higher. So I think this is going to eventually break, but if you may not be in that camp. Okay. So you can see right here, this is support, right? I know we've had a spike below there, but I'm going to say 94.20 is support. Uh, 94.20. And you know what? I'm sorry. I'm going to put the dollar Canadian back. I'm sorry. I'm going to put this back at range until we get a clean break above the highs, which isn't happening now, by the way. Until we get a clean break of those highs, I'm going to keep it on. I'm going to keep it on range. Dollar, US dollar, Norwegian krona. All right, so we are still same crap. Unfortunately, this played out intraday, but this is not relevant. What is relevant is that 618 right here, which is 850, resistance 860, and that's it for today. It's just kind of range bound. Yes, I'm still long, but I'm just saying that there's nothing to really do here. Well, the euro's firm. Euro's at highs. What's interesting about the euros, it's the euro's moving higher. The Aussie stopped, the Kiwi stopped for now. Okay. I don't know if I really want to be short the euro, to be honest. I've got like euro longs, you know, I'm long euro sterling, long euro Aussie, you know, I don't really know if I want to be short euros right now, but we'll see. We'll see. The market's opening here in just a few minutes. So where am I at? US dollar Mexican peso. This is trading very heavy. I am a little worried about the dollar mex. I have not taken my dollar mex off, but my stops are pretty close. So you know, it's a shame. And one of the reasons why, well, main reason why this thing is not playing out to the upside is because stocks continue to be very, very bullish. And, you know, the dollar mex is probably, if I have to guess here, we're probably heading back sub 20 before moving up. Like I said, my stops are close. 2025 is going to be pretty key support today. And we have to get above 2060 in order for this to, you know, have any shot at bouncing. I just don't see it while stocks are as strong as they are. It's just, stocks are strong. And you know, you notice the Rand is strong this morning too. I mean, it's all emerging market currencies. Dollar yen. So dollar yen continues to trailblaze higher. So 109.80, next stop 112 or 111.93. So 111 and 109.80. It's bullish. Dollar index. Same analysis as yesterday, 92.90. Resistance is 93.40 or 93.50, but 93.40 will work. 93.40, 92.80. It's still bullish. Now, let me go back and reference one thing with the dollar index that you might have missed yesterday, and I just want to make sure that you're seeing it. This is the dollar index, longer term, right? Low, 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 underside of trend line, right? So just keep that in mind, guys. It just, we're at the, you know, underside of the trend line there. S&P almost at 4,000. Do we hit 4,000? Oh, we're there. Yeah, we did. We just hit 4K. 4,000 it is. All right, so next resistance, 227% extensions come in at 40.30. $40.30. It's bullish, well above 39.40, because that was, remember that? Do you guys not remember that? Okay, let me just make sure. while we're above here, 39.40, it's bullish. New highs. Why not? Why the hell not? Where am I at? Gold, silver, Bitcoin. Okay, so gold, it's interesting, and I'm sure Stelios would probably agree with this. There's too many people saying that gold is just a paperweight. Those comments are way too common right now. And Dale actually talked about this too on the F.A.C.E webinar. I mean, gold's like, oh, it's never going to rally. Bitcoin's the new gold, blah, blah, blah. And that's usually when, you start to see reversals. But I can't get too excited about gold until we break above that 1760, as you guys know. All right, so I'm going to just write down 1680, key support, 1760, key resistance. While we're below that resistance, we have to stay bearish. Okay. But, we're getting a decent move right now. So here's silver. Like I said yesterday, possible false breakdown, but we're going to have some resistance up here around let's just call it 25 bucks. And then support now is at 24. So 24, 25, it's range bound. Bitcoin, I know we've been monitoring it, but let's just 60,000, and really support now is at 57. So intraday, so 57,000 and then 60,000. Oops, 60. Okay. And it's bullish. All right. Our bias chart is finished. And I think Greg is going to join us today. Hey, Steve. Hey, Stelios.
Hello, hello.
Hey, mate.
So stocks, we hit 4,000.
Yes.
Did we expect
not to get 4,000? I don't know.
I mean, it's nuts. I mean, we didn't. I mean, it just, we're at 4,000. So here we are. And now what? I guess we just continue higher. I guess.
Why not?
I think what we have to look at, and you talked about this on Face, is the VIX is not going along with the whole risk assets to the moon story, and commodity currencies aren't yet either. So it seems that equities are once again just going their own way and decoupling from everything.
I mean, I guess that's the unintended consequences of, or the intended consequences of unlimited stimulus from a monetary and now fiscal standpoint. As we unleash another, big spending package that Biden's trying to enact. Whether or not he's going to get it and what he can or cannot do is a different story. But what we do know is he's gonna spend money on infrastructure. And I'm gonna talk to you guys as an American, and just tell you how really behind America is regarding just infrastructure, from like roads and railways to airports. I mean, we really are behind the curve. Traveling to Greece, just using you guys as an example, whatever was Steve, when we meet 6 years ago?
Yeah, like 7 years ago, I think.
7 years ago. I mean, your new subway system, the new airport, your new Athens airport is beautiful. And, there are a lot of, you look at like, oh, Steve, you were in New York. Just, I don't know which airport you flew into 2 years ago.
New York, if I remember right. I've been to New York more times in the past, by the way.
Right. But I'm just saying, like, if you go to like, you flew into Newark, did you say?
Yeah. Yeah,
Well,
yeah.
that's a decently nice airport, but you go into like LaGuardia and you're like, oh my god, what a dumpster fire place. You know what I mean? So I mean, I'm just saying that we as Americans really, we do have. I mean, for me to say that all of our airports are horrible, it's not true. I mean, there's so many nice new airports around as well, but we do need to spend, and we're going to,
No,
but
you
that's
don't
gonna,
need to.
but it's
Just to give
gonna.
you an example, Greece has too many airports, and the reason is because, as you know, we have many islands, right? So that creates the necessity of many airports.
Yeah.
So, needless to say, many of these airports were, I mean, the smaller airports in islands, etc., were like in horrible conditions, like exactly what you would expect by airports that have been run from the public sector forever. I mean, bad service, buildings that were in a very, very bad condition, even landing roads that were like full of pits. And I know that because, Jason's good father is a pilot. So what did we do? We gave 40 of these airports to Fraport. It's a German private company. They fixed them all, and they're going to be collecting like revenues for a period of time. I mean, quite a big period of time. Zero amount of money spent from the public sector. Actually, we're saving money because to keep servicing and have employees and all that for these airports, we were paying from the public budget quite a lot of money, and they were still horrible. Now we're going to pay zero for them. They all got new buildings, and everything was fixed, and win-win situation. So
But
why, you know?
I'm so sorry, Steve. And it's a great story, but I have to interrupt and I have to keep you on target. The reason why I was talking about infrastructure spending here in the U.S. though is because it's going to unleash more, stronger monetary policy.
For
I
sure,
mean, fiscal
somebody needs to
spending.
buy these bonds, right?
Yeah, so you're gonna see this continuation in equities, and we were asking what we were talking about, like why not, why can't we go higher, and there is this, now you got fiscal and you have monetary spending going higher. I'm not sure what Greece airports have to do with the markets. I'm just
What
trying
I
to.
meant when I meant to say that this is an excuse for more stimulus, because if you want to have infrastructure spending, quite a lot of it can happen from the private sector, as I explained. That's my
Yes,
point.
and you know what? It's gonna happen, and it's gonna, and I guess the point is, one of the things, and one of the arguments that I say arguments, one of the ideas that people are thinking about right now, and actually some of the comments that came out last night were, the higher taxes that are going to come along with the spending. Obviously, the market this morning is not carrying because it's all momentum based. We're seeing the S&P, above 4,000, on our way to, this 40-30 level, which I think is a realistic expectation. 227% extensions near the top of the megaphone, wherever you're looking. It seems like that's going to be the next logical stop. But at what point do we hit some resistance? And I think we're probably closing in on it. So, but it is a day before non-farm payroll. We do have a jobs report. I don't foresee us doing a just so you guys know, I don't foresee us doing a morning edge tomorrow morning, because once the jobs report is over, it's Good Friday. You know what I mean? So that would be it. Wouldn't you guys agree with that?
You know
Yeah,
best, mate.
yeah,
Whatever.
absolutely. We,
Well,
you
I
know,
mean, I
it's
mean,
always like that.
but think about it. Like, the stock market's not open. Nothing's open. Just
Yeah.
FX, right? And the response is going to be to non-farm payroll, and after the non-farm payroll, that's it.
Yeah,
Most
5
likely,
minutes.
yes.
5 minutes and we're done. Yeah.
Yeah, 5 minutes, and then the FX market goes,
Yeah.
quiet. So I think we're not going to be doing a morning edge tomorrow morning. I'm just making everybody think about that. All right. Well, hey guys, I'm going to let you take over. I know we're on the eve of a holiday. Might be kind of quiet today as we just run stops above the highs and
Yeah,
get everybody
perfect conditions
stopped
for
out.
stop runs. Yeah.
Yep. Nice little stop runs, getting everybody out. So I'll let you guys take over. And is Greg coming or is no? I don't know.
I don't
He
think so.
he even said before that he wasn't sure he can make it today, but he said if not today, he's gonna be here tomorrow. That's what he said.
Yeah. Okay.
Okay.
Chad said, I saw a commentary the other day that Obama had the same playbook, yet nothing happened. Money went to clean air initiatives, not bridges and roads, this Tesla, et cetera. We shall see. And, I guess every president, doesn't matter who the president is. Wow, look at the euros ripping. Dollar is just absolutely crapping the bed right now. It doesn't matter who is president. Everybody comes in with certain intentions, and what they can pull off is always a challenge, right? They get
Oh yeah,
altered one way or another.
absolutely.
Anyway, all right, guys, I'll let you go.
Okay, mate.
Thank you, Blake.
Thanks, guys.
Okay. Not that much happening actually. Might as well mention a few numbers that came out. Australian retail sales better than expected by a little bit. UK manufacturing PMI better than expected, and a pretty big jump from last month. So same with Europe. So no, it looks like things are picking up a bit, and even though some areas like the Eurozone are behind in the vaccinations, etc., there's still activity is still picking up, and eventually with the vaccinations going forward and getting everybody having a shot or two is going to bring some normality back. So that's goes without saying. We have manufacturing PMI, ISM manufacturing PMI of the US later today. No reason why that shouldn't beat either. But otherwise, it's been a pretty slow day, obviously, apart from the equity rally, and metals are rallying as well. And for people who followed me in the chat room, I got a little bit more on the long side yesterday in silver at 24.15, and I find myself in this position where I'm long, and I really wanted to go lower because I want to add more, but
Pay attention to this trend line here in gold, Stelio. That's one of the things I wanted to show.
we can't see anything.
Oh, sorry. For some reason, I thought I had shared my screen. Yeah, my mistake. So pay attention to this trend line in gold. We've rebounded very nicely from retesting once again the previous low at 1676, whatever it is. Quite a nice tweezer bottom yesterday on the daily. For the time being, a nice continuation to the upside.
My gut feeling is that we have one more leg lower. I think gold is going to break that trend line. We're going to get to something like 1600, and then the move starts. That's my gut.
For the time being, pay attention to the descending trend line resistance, though, which we're testing as we speak.
Yes.
Because if we break above it, that's going to be a nice bullish development, at least in the short term. And here is the channel I'm monitoring in the case of silver. So obviously, none of them has reversed higher or broken higher yet.
Yeah.
I can't say the same about platinum because platinum is actually making an effort to break out as we speak. So platinum seems to be leading, perhaps. Here's palladium.
It's been outperforming for a while.
Yeah. Here's palladium. Seems to be in some type of a flag formation or whatever here. And as we were saying yesterday, I think the only thing that needs stressing out today is that, the dollar cannot really perform that well, no matter what, as long as equities remain so well bid.
Yes, absolutely.
So I can't find myself being able to be long any of the dollar pairs as long as risk doesn't care at all. You know what I mean? Yeah. And looking at several charts, I mean, here's the cable, right? I mean, purely looking at the formation lower, it looks corrective to me, and we're headed towards the trend line resistance. So, I wouldn't be surprised if we break higher. Even euro is in a bigger type of a channel, which we might have seen an overthrow to the downside. Aussie for the time being, look how it perfectly tested this triangle and rebounded from there. I can easily view this as a corrective formation as well. We've already talked, for example, about USD NOK, which, nothing bullish here for the time being. USD CAD unable to break through this horizontal resistance area at 126.30. Quite weak considering, everything else. So, as long as risk isn't reversing lower, I don't know. I mean, yeah, the dollar can remain somewhat well bid, but is it worth being in that side of the market? I don't think it is. So, in order for me to get convinced that there is more upside, I need to see risk reversing the downside. Until that happens, I'm extremely skeptical about anything that has to do with the dollar, because the overall trend, in my opinion, remains lower, and a corrective move can finish at any point in time. I mean, we've already been correcting for a period of time. It's sufficient. I mean, it's not going to be a surprise if we stop the corrective move like somewhere here. I'm not saying we can't extend higher. We can, but as I said, it's going to be very slow and painful if equities just don't want to give up and correct lower. So yeah, not an easy market to trade. I'm assuming that during the next couple of days, it's going to be very, very hard to see some risk off conditions, because from experience, usually in low liquidity days, surrounding the holidays, and with many participants not really being there, it's very rare that you see risk of conditions under such market days. So I would assume that we're not going to see anything before we're back from the holidays. So I wouldn't, expect something groundbreaking to happen within the next 36 hours. Yeah, I wish I had a lot more to say, which I don't, because nothing has substantially happened since yesterday. We are seeing a little bit of a recovery in crude oil, but in my opinion, that can be within the context of correction of the prior gains, as long as we trade below the broken channels trend line support. I think you should be careful, because there is a very good chance that we have more downside to go. And for the time being, it seems that crude can move lower without equities following, right? So nobody says that we can see another leg lower without equities following. It's not usual. Admittedly, it's not usual. But as you see, not impossible either. Natural gas seems to be consolidating its prior move higher. I wouldn't be surprised if we've already found a low here. That's it, more or less. Let me go over your questions and see what you guys have in mind. Platinum, palladium, I covered those. Natural gas,
too, yeah.
I just did.
Uranium.
Remind me, give me the ticker. Give me a ticker about uranium. We've had a look at it. URA, okay. Yeah. Look at this huge bottoming pattern still, huh?
Wow.
Yeah. So definitely a very bullish move higher that is finally breaking the downtrend, right? Now, The problem is here that we have a lot of divergences. So I'm not very sure that we can see a lot more upside before we have a deeper correction lower. So that's the only problem I see here. But I do think that uranium dips should be bought. I don't see any other way around it. Let's fix this channel. I do think that this move is, very significant from a technical perspective. So, I wouldn't be buying it in the short term, but I do think that any proper pullbacks, should find buyers. Yeah, I would assume, that we're going to get something like this. So wait and see mode. I mean, this was a beautiful area to be buying here. That bullish breakout, even this was a really good looking correction, right? Yeah, but I don't think this is the time to be buying. I think this is the time to be patient so you can buy at better prices. So that's what I think. I wouldn't be fading it either, right? I think it's the time to be patient so you can buy it at better prices. Let me see. Yeah, my pleasure, Laura. Platinum more deep and palladium more. Listen, I'm not sure about it, to be frank with you, because in both the case of platinum, we might have seen the end of the correction. I mean, if we confirm today with a break above this channel, I think it's very, very likely that we've already run the course of the correction. And the same thing will apply to palladium if we break through this channel, right? So I wouldn't rule out that we've already seen the end of the corrective move in both platinum and palladium. So watch these two channels. One we're attempting to break as we speak. The other one we're a little bit lower from the trend line resistance. So watch this and act accordingly. Okay. Any more questions, guys, girls? AussieCAD, sure. Yeah, we haven't had a look at AussieCAD and KiwiCAD for several days. So here's AussieCAD finding support once again at the 61.8. Here it is. We got one more move higher as expected. Last time we had a look at it, obviously we were here because I see this as we were obviously higher because I had already drawn this fib. So yeah, we had this formation, we broke out, we had one more high, and now we're depreciating within this channel. Which channel? This channel. Let's see, because I think it is a channel. Let's see. Yeah. So 61.8 seems to be holding on a daily closing basis, but it seems quite heavy. So we might be in need of a larger corrective move before we can continue higher. Don't forget, though, that, bigger term, we've had a very sharp move lower here and a very sharp reversal. So, looking at this type of a, reversal that we had over here, I would tend to favor the upside. I do think that probably the path of least resistance is higher. I'm just not seeing concrete evidence yet that we've bottomed out in this move. I mean, just a few hours earlier, we were at new multi-week lows, right? So let's first find a low, break through the channel, and then I think we can look for more strength. Now, KiwiCAD is going to look worse, I'm assuming. Yeah, it looks somewhat worse. because Kiwi had like a more sharp move lower. But we have this also channel that we've been moving within, right? Now, clearly between Aussie CAD and Kiwi CAD, Aussie CAD looks, stronger. Now, next downside area of support, I would say, is 86.40. We break through this channel, I think we're going to be attacking, the recent highs once again. But if you want to be long one of the two, choose the Aussie one, as testified by the Aussie Kiwi as well. Especially if the Aussie Kiwi breaks through this larger channel, there's going to be a lot more upside. You see the Aussie Kiwi break through 110 roughly, and you should look significantly higher for the pair, which means that the Aussie should be overperforming, significantly the Kiwi. So that's what I think about them. So pay attention to the Aussie Kiwi for preferred longs or shorts among the two of them. NFMI, let me see what it is. I'm assuming now we're getting in stock territory, right? Yeah, don't buy this. I can tell you that much. Nova measuring instruments, don't buy this, whatever it is. Yeah, I think it's extremely overdone. Huge divergences. There's no way you can buy this and have a risk reward that makes any sense. So you want to, you like this company and you want to buy it, you need to see deep pullback, because look at this. It's simply ridiculous. Yeah, I mean, momentum. I know momentum stocks, but are you sure about the sticker? Because I don't find it. KALC. I don't see it, at least here in TradingView. Applied Materials. Okay. Yeah, same deal here. I mean, very, very bullish, unquestionably. Had this nice corrective move, which is now over. But I mean, this has really gone vertical. I mean, it's very bullish, but how can you buy it? You can't.
Yeah, by the way, clack and click. It's clack, CLAC. Not CA. It's
CLAC.
Clack, yeah. KLAC 10 core is what it used to be. It's CLAC.
Yeah, but doesn't pull
I'm
it
sorry,
like
KLAC. Damn it.
okay, KLAC. Okay.
Yeah, there's clack, click, which is KLIC.
What's this, Blake? What kind of company is this?
Semiconductor industry.
Okay.
Stocks. Same with like Applied Materials, MXIM, all that stuff.
Yeah, this might have more upside because it just broke out to new highs, and I would say that this would point towards 384. I mean, we close above the previous high. I would say 384 is the next stop. And AMAT. Oh, we had a look at this. Yep. So yeah, I wouldn't be buying this either. And CCJ. Okay, CCJ. Let's see. Yeah, that doesn't look that good. I mean, it looks rather heavy. Also, a lot of RSI divergence. Definitely a big bullish move out of a big bottoming pattern. Yeah, that's a good news there. But, you want to be buying it. You might as well do it somewhere here. As long as this trend line is holding, right? But we break through this. And I think we're headed towards there before we can continue higher. So, Here it is. You want to buy it here. You know, you have a good risk reward for a move higher. We break through this channel, and I would assume we're headed back. This is a nice support resistance area at 12 and change there. And then we can move higher from there. There you go. Okay, my pleasure. So, Blake, we said no morning edge tomorrow. So we're going to see everybody on FaCe tomorrow then, and on the daily roundup later today. Okay, guys, have a nice rest of the day. Bye bye.
Thanks, everybody. Bye bye.